Today is Ask Me Anything Friday. I am here for you. Type hashtag Q with your questions, and I'll try and answer as many of those as we can. And in that particular scenario, we were still buying stocks within a bear market, basically, which never do that, right? Never fart the market, and never fight the market, and don't do either of those things. So we just made some adjustments earlier. Just made some adjustments, hot off the press, and we gained another 15 basis points. Gained another 15 basis points or something like that. So Scott is whipping up a little comparison because now our expectancy went from the original golden ticket was around 0.2 expectancy. Yesterday, when I was looking at the data, it was around 1.0. This morning, it's around 1.14. So bigly improvements were made just in the last 24 hours. But hear me out. But be sure you never fart the market. But it does require more of the Outlier 9 to be lit up, like we always thought there would be, right? And that actually shows less trading days. Now, I know that was a point of contention to why we added additional scenarios like the 145 and the 137. And I was telling Scott, I'm like, listen, customers can do whatever they want to do. This is my plan A. I said, lock it down, put it in stone. This is my plan A. My plan A is, I hate these part numbers. I always get them mixed up. My plan A is 1, 2, 3, 4, 5, 6, 7 of the 9. Literally. And yes, that does significantly reduce the number of trading days. But get this, in 2025 alone, just looking at 2025 results, expectancy was 1.8. Just the 2025 numbers was 1.8. And I'm like, that's how much higher than baseline? How cool is that? How cool is that? So we're killing it over here. And plan A is written in stone. I told Scott, make a note of it, make an export of it. This is what plan A is going to be permanently. Plan B is going to be when the SPY is over. Oh, there's Scott right there. Just saying, that's with buy signal and order blocks older than 120 days. So really it's all 9. Who would have thought? Who would have thought? It's a little bit cool. I know, right? Don't worry. My expected reveal launch date is next Friday. Plan A is set in stone. Plan B is when we are greater than 70 on the market Fear and Greed. No, it's not any 7. It's numbers 1 through 7. Now, Scott's numbers are different than my numbers, which gets a little bit confusing for me in my itty bitty baby brain, but don't worry, we'll have that ready. 1.8 per trade. Yes, that includes winners and losers. Yeah. So I'm very excited about that. A lot has happened in the last few weeks, thanks to Scott. What am I smoking this weekend? Literally nothing. Literally nothing. All right, so let's start answering your questions. What is the market breadth of the full ETFs sector mean? Oh, I got you. Great question. It would help if I share my screen. There. That looks way easier. And then it would help if I took this off the screen. There we go. Okay. So who said that? Let me go back to that person real quick. That was Don. Okay, Don. So let's go to market breadth. Don, thank you for the question. Really appreciate you, my friend. Okay. So Don's question was, what is the market breadth of the full ETFs sector mean? So what's really cool about this is we have these organized in different ways, right? So you got the Dow Jones, that's Dow 30, right? Then there's 500 stocks in the S&P 500. Then there's 2,600 stocks for now. We're adding more next week in the full stocks. Full ETFs is actually really, really cool. If you go to your just your dashboard, the regular login page, the watch list page, and then you come over here, this button right here, you probably haven't even noticed it before. I know I didn't notice it for a long time. Click that. That'll show you your sector ETFs. That is what the full ETFs is measuring over here, I believe. So this is showing you all the ETFs and which ones are, or no, maybe that's all the ETFs. Hang on, what is a count? Hang on, I could be wrong, could be mistaken. Yeah, so there's over 200. So this is going to be all the ETFs that are covered. I'm sorry, it's not just the sector ETFs. This is all the ETFs that are covered, just like full stocks is all the stocks that we covered. So there you go. Easy question. You're good, dude. Do I have pants on? No, I have Under Armour gym shorts. What is spooky time mean? It's spooky season, don't you know? Like September, October. Um, the Dogfather race says, Chris, weren't the Outlier channels part of the Outlier 9? I remember you changing breadth to yellow. So the Outlier channels, what that is measuring is how many uptrends versus downtrends we have in a day, right? And so this is really just a way for us to show with your what you could see with your eyeballs, right? If you could measure with your eyeballs, what would this show? So let's look at it real quick. When they're highlighted green or red, that means we're getting more uptrends, less downtrends. That's what we want to see. When they're highlighted gray, that means we're not getting more uptrends. We're not getting less downtrends. So what we're trying to do with that is just make it easy and obvious when the number of uptrends is growing and downtrends is shrinking. And I mean, it was always there. We've just made it easier to see. Now, that was not part of the Outlier 9, but that is part of my entry filters. And don't worry, I'll have all that explained next week. Given your statement about not fighting the market, should we take profits instead of rolling? Okay, so let's talk about let's go to like hymns, right? So when you roll, this is such a ninja hack, right? Such a ninja. In fact, if you're watching this live and you have rolled options and you've seen the power of rolling options, type in the word ninja. I would love to hear from you because this is so cool. Like, let's say you went long hymns here, okay? Just for example. No, I don't like that orange line. That's my stop loss. Let's go to opening. Let's go to green. Okay, let's say you bought hymns right here on this candle. And let's say that it was a trade that you wanted to stay in because you don't have an exit reason. You haven't gotten an exit signal. So rather than closing the trade, because it's a very valid statement, um, should we take profits instead of rolling? Right? If you roll up for every one ATR, an ATR at this point in time was 229. So we go up 229. I'm just going to use approximations. I'm not going to measure it all out. And then actually, let me remove this one and make it my blue lines. All right, there we go. So let's say we rolled it here. When we roll it, we've taken partial profits out of the market. We've kept the trade on, and we can now trade, and we have more capital we can trade with. So we can actually go put on other trades and then do it again, and then do it again, and then do it again. And at this point, you probably have a 100% risk-free trade, meaning you've taken in enough credits to pay for the original debit that you put on, and you still have the trade alive. And then do it again, and then do it again, and then do it again, right? You could literally do it on this particular one 6, 8, 10 times potentially, right? That would be a monster win. And then let's say it comes back down here. Who cares? You've taken so many profits out of here that it can't hurt you. You have banked so many profits that this is a guaranteed winner multiple times over. And then if it comes back down like this, it's just an exit signal. Rolling options is one of the coolest ninja hacks that I've ever come across, and it looks like a lot of people have also been able to play ninjas, to play ninjas with me. Right? We get your ninja swords out and we throw ninja stars around. It is so sick, so sick, so cool. Great question though. So, what is your game plan when we are in a bear market with a SPY downtrend? Will you place puts then? So, Outlier is designed as a long only platform. I have tried to modify the plan to make it work in a bear market, and I'm not saying it doesn't, but everything that Scott and I have been working on is only bullish signals. Now, cat's out of the bag. We will be having short signals at some point, but for right now, Mr. Skywalker, Mr. Luke, I am not planning on doing any short signals, and that's fine. I can just sit in cash and not f up my portfolio And then when the bottom hits, when the 10, 20, 50 turns around and starts going back up, I'll start buying again. Remember, buy stocks as they're crashing up, not as they're crashing down. Um, Andrew asked a question. When are the trading days you refer to purely days on which the open trades, or is it inclusive of days when you potentially held a position? So this would be opening trade days, and it's not many. It's about 20 a year. And that's one of the reasons why I'm so adamant about sitting in cash and not effing up your portfolio. Because if there's 250 trading days a year, let's say on average that you're putting on trades 10% of the time, it's not very many times that you are putting on new trades, but you don't have to. You don't have to be busy in the market. That's one of the things I try and preach religiously is this is not a game yeah, this is not a game where you walk in the casino and you're like, I'm going to go to that machine, that machine, that machine, that machine, that machine. No, 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 no. You're waiting for the exact right time. You are a hunter. We talked about trading personalities the other day. You are a hunter and you are only going to take the shot when everything is lined up, your bullseye is right on the target, and you fire. You can still miss, but at least you are waiting for the exact perfect right moment to fit your trading plan that you have found works the best, historically speaking, mathematically speaking, and then rolling with that, right? And so that's why I'm such an advocate for teaching patience in the market, because anybody can do anything on any day. That's one of the core principles, core tenets of trading in the zone. And I don't want you to. I want you to be a sniper. I want you to be sitting and waiting and ready for when the right moment strikes that you're a cobra and you launch and you kill it. Okay, Ryan has a question. Since the earnings has a greater than 4 expected expectancy, look at the non-earnings period. It may have a negative expectancy because the earnings is so high. The only time we may want to trade is before earnings. I mean, that's up to you, right? Of course, there's all kinds of opportunities all the time, but one of my all-time favorite trades is buying run it runs up into earnings. It is so sick, so sick. Let's see. So this is only on active signals. Once we have everything, we have a lot to do. Once we have everything locked down, plan A, plan B, then we'll move over to swing signals, which will give us even more trading opportunities. So don't be discouraged. Actually, be excited because we are there. There's so much going on, and I'm telling you, my goal is Masters of the Universe money. Okay, my goal is to make sure that I can buy my wife a house next year. All right, in cash. That's one of my goals. I don't know what your goals are. Maybe put some of your goals in the chat. I would love to know. I want to buy my wife a house in cash next year, and it's going to cost me 7 figures. Okay. And because of that, I need to make sure that I can have Masters of the Universe money. And then the sky's the limit from there. Sky's the limit from there. Signal refresh at I believe it's 10 p.m. Central Time. That shouldn't have changed. You roll to what? What's your criteria, dates and strikes? So that's a great question. So for me, you can roll, honestly, you can roll any day of the week, any day, any Thursday, any Tuesday at 2:30 p.m. You can do anything, right? But when is the opportune time? I don't know. It could change from person to person. For me, my rule, trying to get my screen ready here, is when it moves up 1 ATR. So we went back to this HIMS example. As it goes up 1 ATR, that's a trigger. Okay. If it's not doing anything, right? If it's just farting sideways, then you don't have to do anything. But when it moves up 1 ATR, that's a trigger. That's a notice. That's a knock on the front door. Say, hey, you could do something here, right? And then you could do it again and again and again and again and again and again, right? Michael Ross, the boss, says, are we planning any in-person upcoming outlier get-togethers? So Mahesh, so here's the deal. I have been very adamant with Mark and Mahesh that I want to do get-togethers, but they want to make it a big show. They don't want it to be, everybody just meeting, hanging out for a little bit. They want it to be a spectacular, right? They want it to be a conference. They want it to be something awesome and huge. So official outlier meetups, still off the table for now, maybe in 2026. But unofficially, I don't have any of those planned either. I would love to do that, but Mark and Mahesh have bigger goals in mind before that happens. Okay, Justin, I know you have changed your trading plan in the past when I stopped selling options. The trading plan is our bedrock. When it changes, how do you internalize the new plan? Man, that's a great question. So for years I sold options. And it was only until the end of the year, I forget what year it was, when I looked back and I had an 84% win rate and I had significantly less dollars in my account. And I was like, there's something wrong here. Why does this happen? How can I have an 84% win rate and be down hugely on balance? And that's when I reached out to Steve Burns, and Steve Burns introduced me to the Market Wizards. And it was very much I'm not doing something right. I need to figure out people, or find people to teach me the right way to do it. I need to find people who have made money in the markets and I can learn directly from them, which is pretty much what you're doing here as well, I'm sure. Um, so it made a huge difference in my life to do that. But it also took me a long time to unlearn those bad habits. I'm telling you, unlearning bad habits is so hard. You've probably experienced that too, and whatever bad habits that you may have. Unlearning bad habits is so hard. So you have an advantage. Like JC, who was in our alpha group, he'd never traded anything before. He described his level of awareness in stocks that he could not spell the word stock. That's what he said his level of knowledge in the markets was. And because of that, he only learned the profitable habits. Man, if you could start off on the right foot and only learn the profitable habits, that'd make your life so much easier. So for sure, it's one of those things that it takes time, but having the rule set, and that's why I have my PowerPoint, right? Because then I can go back and I can say, okay, this is what I'm doing. Step 1, step 2, step 3, step 4. Then I don't have to think about it. And I still, to this day, go back and follow my plan. Step 1, step 2, step 3, step 4. That way you don't have to worry about it. You don't have to think about it. Jocko Willenick has a book. I think I have it. My mom gave me that book. I don't. I've got Extreme Ownership and I have The Dichotomy of Leadership by Jocko Willenick. But there's one called Discipline is Freedom. And it's exactly that. It's having the discipline to follow a plan gives you the freedom to make sure that you don't have your mind boggled down with what am I going to do? All I got to do is follow the plan. Makes it simple. Should you roll whenever your delta moves deeper in the money? It will move deeper in the money, mathematically speaking. The deeper you get, right, the more that it works, you're going to get deeper in the money. So that is a given in this case. Okay. Mr. Soho, I'm a customer of OVTLYR and I don't know how to put the order blocks on TradingView. I got you. So easy, so easy. Okay, so first, go open TradingView and get a free TradingView account. Second, you want to go to the indicators, and then there's one called Deep Thought. That's what we tell everybody to use. Go get Deep Thought 4 or 3.4. There may be a new one coming at some point. Deep Thought 3.4, and put it on your charts, and it's going to have your charts looking exactly the same as mine. Colors may be a little different, but you can adjust the colors to suit whatever you like. But you're going to be in the right spot by doing that, and that is free. That is free. Great question though. Really appreciate you. Oh, so at least rolling to what? I didn't answer that question fully. I'm just rolling closer to the money, right? And it really depends, right? In some stocks it's moving 1 strike. Some stocks it's moving $5 of strikes. That's really up in the air. It really depends on liquidity once you get there. Then there's times where you can't roll. There's no liquidity. You are on the strike where everybody is at, and there's nowhere to roll to. And that's fine. You just got to leave it there. I call it a phantom roll. You can't do anything with it, but you've at least acknowledged that I would roll had this happened. Then if you get too close to expiration, you can roll out in time as well. Meaning, let's say you're on the 100 strike and you need to roll, and you can't roll in the expiration you're in. So you look further out, and you see, oh look, the 105 has lots of liquidity. Looks good to me. I'll roll from the 100 to the 105, and still you must take in a credit. If you're taking in a debit, you've done it wrong. Cancel the trade, try again. That is a fact. If you're doing it for a credit, you have broken something. Oh, you're super duper welcome, Mr. Soho. I saw your chat down there. Let me go down there. Yes, finally. You're welcome, dude. Only roll for a credit. If you're doing it for a debit, you have absolutely done it wrong, and that's okay. Listen, we all make mistakes. I'm trying to make sure you don't make another one. Cancel it, redo it. If you do it for a credit, you're doing it right. If you're doing it for a debit, you're doing it wrong. Redo what you're working on. Mikey Mike, looking at a second roll, there's an order block at 2.2% above the rolling point. Would you cash out instead? No, I would still follow my rules. Once it goes up and hits that order block, that's when I would be looking to cash out. But if it's so close that you feel like it's not worth rolling, I get that. I get that. Now, one thing that Scott found in the data, praise Jesus, we have Scott on staff, by the way, is that order blocks that are less than 120 days old, I'm not saying ignore them, but they don't have the resistance power as order blocks that are greater than 120 days old. And let me see if I can show you some examples of that. So let's see, this one from February to May was less than 120 days. Yeah, that was 60 days. Blew right through it. Blew right through it. This is on AMD. This one here was only a few days, blew right through it. This one was only a few days, blew right through it. This one only a few days, blew right through it. This one, however, was years old, did not blow through it. Actually got rejected bigly. Let's go to another stock. I think Amazon has some order blocks. This will do for my example here. Yeah, let's do that. So this order block right here, 55 days, blew through it. This order block, not many days, blew through it, right? This is something I only recently learned, and I'm so stoked that I did. I am so stoked that I did. Thanks to Scott for running the data to see order blocks that are very young don't make a hill of beans, but older order blocks can make a big difference. Can make a big difference. Now, it did go through these here, right? That's more of an exception than the rule. But the younger ones don't really make a big difference. You can see right there. Let's go to a different stock just for funsies. I think Netflix. Man, I haven't looked at Netflix in ages. Good Netflix. Okay, hang on. There was one. Yes, let me give you a fun example. So right here, Mahesh was telling me, this was in July of last year. Mahesh was telling me he was going to go long Netflix. And I'm like, Mahesh, don't do it. There's an order block right there. Whatever you do, don't go long Netflix right here. And he's like, nah, it's fine. Smash back down. Now that order block were trapped buyers that happened in 3 years before, November of 2021 up to July of 2024. So nearly 3 years. And then it got monkey hammer back down and it struggled to get through that point. And then it finally pushed through, right? But it took from June 12th to September. Actually, no, even down again. It took until September 17th, from June 12th to September 17th to finally get through these order blocks right here. So the older the order block in general, the stronger they are. But if they're under 120 days, they really aren't strong enough to be resistance. So I thought that was awesome. I'm so glad I had that in my back pocket now. What is your new stop loss rule now? Last time I heard you're testing 1 and 2 ATR stop losses. Thanks. Stop loss rule right now, and I dropped it in the Discord so I wouldn't forget. I still need to build a position sizing spreadsheet, but it was going to be with the exact same dollar risk. And this is important to me. Oh my goodness, somebody wrote a novel. Wait for it. I don't know where I put this. Here it is. Account balance times risk divided by the max of 2 times the ATR or the price minus the 10 EMA. I still need to work on this, but this is exactly the formula that I'm going to use to get the shares and divide that by 80. That's where I'm at. But that's going to be my my stop loss. I'm sorry. That's going to be my position sizing. Stop losses are going to be based on the 10 EMA. Stop losses are going to be based on the 10 EMA. Okay, I should have clarified that. That's my bad. Theo says, speaking of order blocks, what does the thickness about mean apart from how old the order blocks are in days? Oh, the thickness. Okay, great question. So you know, you got some thin ones here and you got some thick boys down here, right? The difference here is the wick of the candle that it was formed on, because the candle, right? This candle here went from all the way down there to all the way up here, where these candles were much smaller candles. Honestly, I don't know if that makes a difference. It really is just the height of the candle from bottom wick to top wick. Ooh, Richard, my allocation is to always buy 500 shares. That's a problem. That's a problem. And I don't mean that in a bad way, Richard, but 500 shares in Coke has a completely different risk than 500 shares in Tesla. A tremendously, monstrously different risk. And we can base that on ATR. This is the average true range. Now, I learned this directly from a billion-dollar hedge fund manager. So don't listen to me. I'm just a random guy on the internet, but I do know what I'm talking about here. If you're always buying 500 shares, that 500 shares in Coke is going to be tremendously less risk than 500 shares in Tesla because Tesla has a higher ATR value. And because of that, even though it still seems like, oh, it's only 500 shares, if the ATR value, let's go look at the exact numbers here. Let's go to Coke. KO. Current ATR value is 95 cents. Tesla, the ATR value is $12.12. There is 12 times more risk per share. 12 times more risk per share to trade the same number of shares in Coke and in Tesla. Big, huge, tremendous difference there. That is a huge thing that I definitely want you to start taking a look at. Dana says, I have an Audible credit. If I could only pick one book, what would it be? And second one, just in case I already have the first one. All right. If you could only pick one book on Audible, it is absolutely by far number one for sure. New Trader, Rich Trader. This book on Audible is great, by the way. And it's really short too. Great one. Second one would be, oh, that's hard, dude. That's super hard. Well, it depends, right? What do you like? Do you like history? Do you like because if I could pick one on history, I can't even pick one on history. I would pick between three on history. I would pick The Man Who Solved the Market. Then I would also pick How I Made $2 Million in the Stock Market. And then I would also pick Market Wizards. And I've worked with 5 of these dudes, so I know those guys. That would be if you were into history. But if you're into like learning the lessons of trading, I would go with trend following or trading in the zone. Fuck. And then the complete total. Dude, I just get more Audible credits. Just get more Audible credits. I can't narrow that down. There's so many good resources out there. Dana, make some Masters of the Universe money and then buy more Audible credits. How's that sound? Okay, Morgie says, I may have misunderstood, but it was at 0.2 expectancy before you improved it. Does this mean the previous strategy was a losing one? No. 0.2 means that of all trades in that strategy, wins and losses, and this is the move in the underlying stock, not in, I was hoping Scott had something comparable for me right now. He doesn't. Okay. That means that all wins and losses on average had a 0.2 percent gain on the stock price itself. That doesn't include leverage. But for context, last year I made 91.37% on 0.2 expectancy because I applied the leverage correctly. Like that. Now we're pushing like closer to 1.2. Give me a freaking break. Let's see. Do a few more questions and we'll get out of here. Do you guys like Ask Me Anything Friday? I hope so. Oh, Scott says it's running. Okay, cool. Thank you, Scott. Spoilers, it wasn't 0.2. I thought it was. Let's see. What would you consider rolling out if you get close to expiration? Okay, this is a great question. This is going to get deep options theory real quick, okay? So 1 week before expiration, is the trade already profitable? So this is the expiration of your options. Is the trade already profitable? If no, dude, it may not work out. Just go ahead and close the trade. Just move on from it, right? If you've already had it for 2 weeks and it's still not profitable, the likelihood of it coming up in the last week is very unlikely. It's just time to move on. If it is profitable, can you roll up and out for a credit? Now, I'm telling you right now, if you go from the same strike, so the 100 strike here to the 100 strike out a week, it will cost you more money. By default, it will. And so that would mean you'd roll it for a debit, which you don't want to do ever. But if you roll up, meaning closer to the money, and out, meaning further out in time, so go from the 100 to the 105, moving out a week or a month or whatever, you should still be able to pull in a credit. It may not be much, maybe just 10 cents, but it's still a credit, which means you're reducing risk. Um, and oh gosh, I lost the question. I'm sorry. But here's the rest of what I'm talking about, right? It's exactly just rolling like you would in the same expiration cycle. You're just doing it further up and out at the same time. Um, so yeah, it's a great question. Can we have a signal refreshes in X minutes on the dashboard so people don't have to ask you all the time? That's a great idea. Um, but it's more just I mean, I wouldn't say something like some sort of countdown, but maybe like a little eye icon somewhere that says like signals refresh at whatever PM every night. That would be a good idea. I like that idea. Alan says, I have my pension in stocks and do not have the opportunity to trade options with my pension. Would you still trade using the OVTLYR strategy? Oh yeah, for sure. Everything that we do, and this is a super common question, Alan. Everything that we do can apply to stocks. Using options just gives you leverage. But at the end of the day, we are maximizing expectancy based on the price of the stock. And then once you understand that the underlying option has everything to do with the price of the stock and that we're trying to maximize the delta move, there I go getting all nerdy about options. When you understand we're trying to maximize the delta move within the option, then you can just look at it like that, right? You can absolutely have tremendous results trading just the stock, but if you can't use options, it all still works pretty much exactly the same. Great question though. Are you thinking of testing a rule about trading stocks that closed above an order block the day before? That's always been one of my rules. If it closed above an order block, the order block ended. It's in my plan. I'm good to go. And if you're trading stocks that closed above an order block, would you limit it to say 2%? No, no, no. I mean, if the order block closed, that's all Chris needs, right? If let's look at this Tesla example here. If the order block closed, right, that's all I need. If it closed on that date, that's all I need. And here's a great example. You don't need it to be a certain percent higher. You just need it to be above. Okay. Great question though. And now with my 10 EMA stop loss there, we could have run this whole thing up right there. Maybe closed on that date. Depends on what it looked like in the last 30 minutes or so. But still, dude, I am so stoked about all these updates. Um, let's see. Do I think The Wolf of Wall Street is a top 100 movie? I am not a person who watches a lot of movies. I've seen it once. Um, I don't know. I don't watch much TV. Thoughts on the AMD Advanced Money Destroyer? Sit in cash and don't F up? Bro, AMD, which I've been telling people for a minute, has this huge, giant, ugly, nasty, years long order block on top of it. And I got all the AMD haters telling me how dumb I was when it was farting with this order block right here. And my perspective didn't change. It didn't change at all. Still hasn't changed. That there are trapped sellers here that until AMD has enough power to close above it, 187.50 or higher, it's not going to happen, right? It needs a lot of buyers to push this up. Now, here's the thing. I don't follow the news. I don't care about the news. I don't know what the Lisa Wu's doing over there. I don't know what their GPUs are doing. I don't know what their CPUs are doing. I give no shits about that. I give no flying monkey donkeys about it. All I know is that if the price has a huge overhead resistance like this, it's super unlikely that it's going to blow through. But when it does, people are going to be super stoked, super happy, and be very excited to jump back in. So until that point, I'm staying out of AMD. Well, listen, I'll be the first one in line if everything else lights up to buy it right here at 188, 187.50. If we can push it higher and we can push it up to 207, that'd be great. I'm there, right? Don't ever feel like you need to marry a stock, date a stock, right? Let the stock have a great time with the stock, and then move on, right? Remember, all stocks are bad. All stocks are bad. AMD is included in the all stocks, but every once in a while, like right here, they act right, right? When that trend template crossed over, it was a beautiful uptrend. What do we see on this trend template today? A big, nasty, ugly downtrend. 10 under 20, price under 50. It does have some support order block right here. It's not a super long one, so I don't know how much support it'll get. But yeah, I'm staying as far away from AMD as possible. Salty Brad, if you bought an option that crashed through your half ATR on a single day, could you roll up and out to a leap to try to protect your initial investment and still have the option on the table? Brad, you know better than that. So, Brad is one of our graduates of OVTLYR University. Brad, you know better than this, right? If the stock has told you it's not going to work out, it's not going to work out. And that's okay, right? Don't try and hedge your bet. Don't try and push it out farther in time, right? Just take the loss, move on, right? Remember what Mark said. Remember what Mark said. Let me find the slide because I got you, Brad. I know that you know this. There's no shame in losing money on a stock, but to hold on to it and let it get bigger and bigger, or even worse, to buy more, that's amateurish and self-destructive. And I would put the self-destructive in that camp right there. You're good, dude. I believe in you. Just listen, you are one of the best outliers out there for having graduated OVTLYR University. So I know you know this. Can we get a monkey hammer? It's been a hot minute. It has been a hot minute. There we go. Let's see. Stocks with benefits. Yeah, exactly. You don't buy a cow just because you need the milk. Yeah. It is super hard to break old habits. I totally agree with you. Chris only watches Batman movies. That's correct. And some stocks are psycho. Not only are all stocks bad, but every once in a while they're pretty psycho. Let's do 2 more questions and I'm out of here. Before OVTLYR, would you scour stocks? I feel like that work where you put in is now condensed incredibly. Dude, I had different screeners that I would run. And to tell you the truth, OVTLYR shows the fear and greed and gives you those buy and sell signals based on the fear and greed components that go into it in a way that I never had previously before this. And I would be, I'd get into a stock and then I get knocked out of a stock, and it was really frustrating. But the great thing with OVTLYR is it actually shows you, the buy signal, the sell signal, how the market's acting overall. You've got your breadth, you've got your fear and greed on the market, your fear and greed on the stock, your fear and greed on the sector, right? And you want everything lighting up all in your favor. You really do. When what we have found is that the 9 of 9 is really a big deal. It's really a big deal. Somebody should ask, how do you get OVTLYR? Well, that's a great question. In fact, you can sign up and get the wait a minute. I gotta do my pitch. I appreciate the softball pitch. Let me do it right. But you're probably asking yourself at this point, what is OVTLYR and how does it work? Well, Uncle Warren used to say, be fearful when others are greedy, greedy when others are fearful. OVTLYR shows you if investors are acting irrationally fearful or greedy, and by how much. I just told you about that, allowing you to get in the stock before the OVTLYR move happens. Now, if you're ready to save time, make money, and start winning with less risk, it's just 3 easy steps. Step 1, head over to OVTLYR.com, grab the annual pass for just 82 cents a day. If you're on the monthly plan, you can upgrade and save 64% with 1 click. That's right, just 82 little bitty cents a day. Step 2, start using the OVTLYR 9. I show you how to do that all the time. And then step 3 is sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. All right, one last question. It's probably going to be 2 because I love you guys so much. Can you put that monkey hammer meme image on a t-shirt, bro? Oh, that image. No, that's too complex for a shirt. That's too complex for a shirt. We do over at our merch shop, which if you're watching a replay, it'll show down below. It won't show up on oh, by the way, we got new 80 deltas. This is new. I didn't know that this got pushed in yet. I love this. Roots and I were working on this. Holy crap, these are so cool. Oh, she needs to do the two images on there. 80 delta, how you like that? That's fun. I literally did not know that was updated. But we do have a fun monkey hammer graphic here on hats, on hoodies. Oh, that's new. We got it on the sleeves too. That's cool. Let's see, on beanies, hats, on water bottles. Yeah, dude, we love being able to meme on stuff with you guys. So this is super fun. Yay, 80 delta. Very cool, very cool. Can you use the OVTLYR with just 10K? Oh yeah, for sure. Now, of course. if you're limited by capital, that will make an impact on your position sizing. Now, let me see if I have my hang on, hang on, hang on. I wanna thoroughly answer this question. I want to thoroughly answer this question. All right, let's say I'll just leave those on there. Let's say that I have a $10,000 account. And let's say that I want to risk 5% per trade. Okay. What you'll notice here, let me make it bigger. What you'll notice here is that all of them show only one option contract. Now, that actually is just rounding, right? I would say honestly, I know it sounds very snobbery of me, but I would say 20,000 is the best place to start, because then you can actually position size more appropriately, right? Now you've got 2 of these, 3 of these, 4 of these, 1 of these, okay? Whereas if you're at 10,000, everything at 1, that means you're honestly taking bigger risks on some than you are on other, and it does make a difference. It does make a difference. Shh, you just want to say my name in the chat. By all means, Skywalker, I will gladly. In fact, here's what I want you to do. Everybody watching this, I want you to go over to LinkedIn and update your LinkedIn profile to say professional fund manager. And if anybody needs a reference, just put Christopher Yule at OVTLYR is my reference, because he teaches me how to manage a fund every single day. There we go. Scott says, I found it better to use the floor function on the option size so you don't take a bigger risk. Yeah, it really does make a difference. Can we please get a position size spreadsheet in Excel? Bro, the plan for that is actually to build this into OVTLYR at some point. I don't know what version that's going to be, but I really don't like relying on Google to help us with this. The way that it works is you key in the symbol, it queries Google, it pulls in the data, and then it helps build your position size. I really don't love that, because there are times, and you may have seen it, where for some reason Google Finance isn't working correctly. And then like I get a million messages like, oh, the position size thing's broken. And it's like, it's not. It's always worked. It will still continue to always work. The issue is there's a problem with Google. There's a problem with Google, and that is beyond our control, right? Beyond our control. All right, very, very last question. Who's it going to be? Very, very last question. Hold on. I'm making sure it's a good one, and it's not one that's like, how much has Scott made in his first $1 billion? Hang on. I want to make sure this is a great question to end with. Charlotte, this is actually a brilliant question. I like it. Have you ever tested the ATR of a stock at entry? Is it possible for a stock to not be volatile enough? I love that question. I love that question a lot. Now, let's go back to our position sizing spreadsheet. Is it possible that it's not volatile enough? Let's put in Coke. Let's put in Tesla. Let's delete everybody else. There we go. ATR of Coke around $1. ATR of Tesla around $11. When that happens, right? Remember, this is on this position size of only $10,000, right? Right. Tesla is 11 times more volatile than Coke. Yet, if you can't position size correctly, that's going to put you between 1 contract and 2 contracts. However, like in share size and actual risk size, it's way different. So that's why I say, honestly, you really want to get to at least 20,000, because then you can position size correctly. Like a 5-to-1 is a lot more appropriate. If I put it at 100,000, it'll do 29-to-2. Yeah, that's more appropriate. But let me delete these over here. The question was, have you ever tested ATR for a stock not to be volatile enough? In that case, what it will do is have you get a bigger position size, right? Because the ATR is just measuring what the volatility is. So if the volatility is really small, it'll actually prompt you to have a bigger size. If the volatility is really large, it'll prompt you to have a smaller position size. So that's kind of baked into the position sizing formula. That way you can keep a consistent amount of risk. So listen, I hope this helped you save time, make money, and start winning with less risk. And if it didn't, that's all right. I have tons more videos that you can click right here that'll do exactly the same. Have a fantastic day. We'll talk soon.